Investing seems super complicated when you're just starting out, but honestly, it's way simpler than you think. Today, I'm going to break down the absolute easiest way to start investing from scratch. Even if you've never bought a single stock in your life, by the end of this video, you'll know exactly what accounts to open, what to invest in, and how to set up a long-term strategy that grows your wealth on autopilot. Most beginners get it wrong. They try to pick individual stocks, chase the latest trends, or jump on hype trains. But that's a recipe for stress, confusion, and usually losing money. The easiest way to start isn't about guessing what's going to be the next big thing. It's about building a simple, repeatable system that works for decades. Let's start with the foundation. Choosing the right account. If you're in the United States, your best bet is usually a Roth IRA or a standard brokerage account. A Roth IRA is amazing because your money grows completely tax-free. That means every dollar you invest now could come back to you later with zero taxes attached. A brokerage account is a bit more flexible and you can access the money anytime. Either one is a great choice. The important part is just having a place for your money to grow. Okay, so your account is set up. Now, what do you actually invest in? This is where people get overwhelmed, but it gets so much simpler when you stop thinking about individual stocks and start thinking about broad, diversified funds. The easiest way to do this is with ETFs or exchange-traded funds. Instead of trying to pick one winning company, an ETF lets you invest in hundreds or even thousands of companies all at once. For example, a total market ETF, like VTI, gives you a tiny piece of large, mid, and small companies all across the United States. An S&P 500 ETF, like VOO, focuses on the 500 largest and most established companies. Both are super affordable, low maintenance, and perfect for beginners. You're not trying to predict winners. You're just buying the whole market and letting the economy do the work for you over time. Now, how much do you need to start? You really don't need a lot of money. Even $10 or $20 a week can grow into something significant over the years. What's way more important than the amount is consistency. Investing the same amount on a regular schedule, whether that's weekly, bi-weekly, or monthly, is a strategy called dollar cost averaging. This automatically makes you buy more shares when prices are low and fewer when they're high. It smooths out your returns and takes all the emotion out of the process. The next piece is all about mindset. Successful investing isn't about checking your portfolio every single day. It's not about trying to time the market or catch every little dip. Long-term investors think in years, not days or weeks. The stock market will always be jumpy in the short term, but historically, it grows steadily over decades. The real secret to building wealth is staying calm and sticking to your plan. So, when should you adjust your strategy? For most beginners, the answer is almost never. A simple portfolio with one or two good ETFs is more than enough to get you started and keep you going. You can check in on your strategy maybe once or twice a year. But don't let scary headlines or short-term news shake you out of your plan. Honestly, the less you mess with it, the better your results will probably be. And finally, just remember that investing is a long-term journey. You're going to see ups, you're going to see downs, and everything in between. But if you stay consistent, keep your costs low, and just trust the process, time will do all the heavy lifting for you. So, to recap the easiest way to start: open your account, choose a broad ETF, invest on a regular schedule, and be patient. It's that simple. If you want more beginner-friendly investing lessons just like this one, be sure to subscribe and check out the other videos on the channel. Thanks for watching, and let's keep building your financial future the simple way.